Hello, everybody. Kirk Spano, Investing 2020s and various investment letters and investment firm, Blue Mountain Asset Management. Going to cover earnings a little bit this week and a couple of interesting developments in clean energy. We seem to be getting an opportunity that might become just a little bit better here in the next month or two, but it's looking pretty interesting. As you can see on the earnings calendar over at Stock Rover, we're getting the last big wave of earnings this week, and then it tails off the rest of the month. So today, tomorrow, Wednesday, Thursday, big earnings days. So we will get a lot of information. Just a note about Stock Rover, which I'm going to write a little article about when I get back after Labor Day, and I go through a bit of a learning curve. They've implemented a lot of the upgrades to the site that I asked for and that other subscribers asked for. And it's really just become a top-notch tool again. So you know how it is that as these things develop, they go through waves where they kind of drift down a little bit as other services add features, and then these guys, caught up. So I'll go through this website again soon, but if you haven't tried Stock Rover, you might want to check it out. I have a link in the investment letter services. It's really useful for people who want a tracking tool for multiple portfolios, where your money isn't all at one place, or people who actually screen for their own ideas and they want to keep track of the financials of all of their investments in one place. It's just a great service for people who want something that makes their life easier for a few $100 a year. Back to earnings. FactSet put this out a couple days ago, and what we're learning is that the earnings revisions pretty much bottomed out last quarter, and there's still some earnings revisions going on, but it looks like we're close to the end of it. And what we know about that is when earnings revisions get pushed down versus getting pushed up, that usually means that in about a year, we start to get very good comparables. So from the second quarter of this year to the second quarter of next year, we probably ought to start to see pretty good comparisons. But even by Q1 of next year, we're going to see revisions upward. And that's really what usually spurs the stock market up. We may even see those revisions upward in October, in Q4. So I think the next couple of months, we are going to get that little strong dollar event. We're going to see a little whiff of inflation, but I think it'll be temporary just because most of the forces out there are actually deflationary: aging demographics, technology, additional energy resources. The only thing really keeping the price of oil up, which has typically been half of the impact on inflation, and it's down to about a third now, is the fact that Saudi Arabia is holding back on oil production again. And they've even decreased their production by another 1 million barrels a day. Russia also decreased their production, mainly because they don't have the money to invest in new production. So that's more structural, even though they're positioning it as something that they're choosing to do. The reality is they don't necessarily have the money, given everything they're spending on the war in Ukraine that they are clearly losing. Not that Ukraine is winning. It really is a lose-lose situation. But Russia is not, and I shouldn't even say Russia. Putin and his right-wing nutjob nationalist followers, there I feel much better about saying it that way, are just losing. They're possibly about to lose power, and I will stick by my prediction that Putin is out of power sooner than later. Will it be by the end of the year? Not so sure, but I think it'll be sooner than people think. So as far as the earnings go, though, if we don't get that surge in inflation, which was holding back earnings, I think we're in pretty good shape. You can see that it kind of bottomed right here. Now it's kind of starting to drift up on the forward EPS, and I don't know that it'll shoot up like it did here. I don't think you're going to get much of a dip. Maybe there's one more quarter where it dips, but I think this is a pretty firm base. Start to see it drift up again, and that'll be supported over time by the faster growing mid-sized companies entering the S&P 500 and the old companies that don't have any type of growth falling off of the S&P 500. So the S&P 500 will continue to improve over time as those 100 to 200 companies switch spots, which is going to take years, but you're probably going to see 1 year where I think that they set a record for replacements on the S&P 500. And if we can avoid a massive collapse from the boomers retiring 4, 5, 6 years out, I tell you what, I'm sticking with my 15-year bull market and economic expansion with only minor speed bumps. And that really speaks well to the opportunities. So where are some of the opportunities? There we go. All right, your oversold stocks. Suddenly, you started to see some of the clean energy names get beat up. Enphase, Brookfield Renewable, Solar Edge, go right down the list. So Solar Edge got beat up here, and that's a combination of a couple of things. One is that the outlook for all of these clean energy companies, remember this is just on the 1 year forward, all started to pull back a little bit. It's largely an impact of inflation. These guys are a quarter late compared to a lot of the rest of the market in doing their downward revisions. So this is probably a spot where we can start looking at clean energy, and we can even just start buying ETFs because this is across the board. I'm going to show you a couple more charts, but it's closing in on what I think is its bottom fishing price, maybe another $20 down. Enphase, same look. If this gets close to 100, I think you got to look at it. SunPower, I've nibbled on a couple times and sold cash secured puts. It's right at its bottom fish shade. We've got Brookfield Renewable Partners here. They've done a dip. Can it get down to bottom fishing? Maybe. It's only about $4 away. These are all starting to look like cash secured put sales. Brookfield and SunPower especially. You flip on over to healthcare, and we talked about Pfizer the last couple of weeks. Looks like it's got that one more leg down and then lower 30s. I think it's a screamer. And in fact, when I take a look at this, I almost feel like bottom fishing should be about there. And it would be really tough for it to break through this area. And maybe a buck or two, but about 31, 32, you got to get involved. The one everybody's wondering about, Emedis. I will be doing an article on that. What I would like everybody to do is read the earnings call transcript, because I think there's some pretty important stuff in here. And I think that this is setting up for another big run. If you take a look at the daily chart, you can see that you had this rally, first wave, second wave, third wave. Now it's consolidating here in kind of a diagonal. The way the rules work here is if this follows the rules, and this is setting up the way I think it's setting up. Wave 1, 2, 3. From the bottom of wave 1, from the start of wave 1 to the end of wave 3 is where you take your measurement. And if we get a wave 5, and especially if it ends up being the biggest one, and in this setup it looks like it will be, because otherwise wave 3 would have been greater than wave 1. Get a little dip today, rise, could take off. Now where would it head? This line is one of the typical lines, 1.618. So wave 5 would end around 18. Or another typical line is 2.618. So really anywhere in this range from about $18 a share to about $25 a share is a pretty plausible wave 5 rally. Now, sometimes these go bonkers. You can get all the way up to a 4.618. It's rare. It does happen time to time. I think the setup here, if there's institutional buying, is that it could actually get up to close to 40, which would be a new all-time high. And I'm not positive that it happens here, but it could, because Emedis is now the size it needs to be to get back onto the Russell 2000. And that means that there's going to be 2 to 3 million shares bought by the index funds next June. So if this stock just keeps progressing, boy, you could really see it take off. Now, let's suppose it rallies up to in the 20s, which is close to the all-time highs, right? What if it hits resistance in here, then has a small 3-wave correction, 1, 2, 3, to in here somewhere back in the teens? Then I think that next rally after that would be the one that blasts it way up here. So I think a price in the 20s, we're likely to see pretty heavy resistance, probably where we close our calls. I think where a lot of people close their calls, and you get that little corrective wave action. The people who are just hyper, it's going to go to the sky, to the moon forever, don't understand the dynamics of market structure. So I could see this rallying to, right in here, little correction, 1, 2, 3, and then bam, by next June. So I think by next June, Emedis has new all-time highs, and it could be as high as 70, $80 a share by then. The buying from the index funds is a big deal. So the float keeps falling based on the short interests getting eaten up by longs. There's only about 4 million shares short at this point. There's not a lot of option shorts, right? There's not a lot of people actually taking the other side of the bet on the put options. A lot of it is the money makers. There were some pretty big bid and asks today on some of the calls, so I'm watching that. I think that is the market makers trying to avoid having to buy more stock. We'll see. I don't know who would have 2,000 or 3,000 shares, 2,000 or 3,000 calls for sale. I think that is probably the market makers. I mean, there's only 1 or 2 other big investors besides me who has that many, and none of mine are for sale. So we'll see. But I'll be writing this article on Emedis tonight. And I think that we are going to get a pretty big opportunity to buy clean energy. If you just take a look at QClean, remember this one has a big Tesla position. So this would be the one where you tie it to Tesla. TSLA. So this is hard to look at. Let's take a look at the 1-year chart. There you go. That's easier to see, right? Pretty big correlation with Tesla. So if Tesla dives, this one will dive. And when Tesla bottoms, this one bottoms. Take a look at PBW. Still a correlation, but less of a correlation. But again, because it's only like 2 or 3% of this portfolio, it was like 10% of the other one. If this goes down, then this goes down. So I think that we are pretty close to seeing a final correction in these clean energies. Had its rally. If it stops going down around here, I guess you can argue 1, 2, 3, 4, then 5. It has to stop in here somewhere for it not to be a different pattern. So I think right in here, mid-30s, pretty good spot to sell some puts, and then you keep an eye on it to see if it breaks below here. Breaks below here, it's a different pattern, and it could, end up, down in here somewhere. But this is pretty good, strong support right there. Right? That looks like a bottom to me. So I think that we're really close to starting to wave 5 up next month or so, 2 months. We'll see how the strong dollar moment works out. But we're pretty close to being buyers again on clean energy. And if you're an income investor, I think Pfizer is right on top of you right now. So selling puts on that one is a pretty good deal. So for those of you who are put sellers, you get a decent premium on healthcare stocks that seem a little bit more volatile. This corrective wave, I haven't counted 1, 2, 3, 4, 5, 6, 7. Yeah, it looks could be a 9 wave. Wait, 1, 2, 3, 4, 5, 6, 7, 8, 9. I don't know. I'd have to ask Shooter what the heck that looks like to him, but it looks like it's almost over to me. It's getting into that right range. So you want long-term dividends with some upside of mRNA, I would say, jump in there. Somebody mentions that PBW pays a dividend. It does, because it has a lot of the yield codes in there, which would include companies like Brookfield, which I erased. But yeah, I think PBW is my favorite because it's a nice global play. And then I can use QClean as my proxy for a more diversified version of Tesla. But if Tesla bottoms, then I don't necessarily want the diversification, right? So from here, you kind of want diversification. But, if you're a stock picker, Tesla off a bottom has always been a great investment, right? Because they always get the hyper rally. $1 trillion. Tesla's the best, blah, 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 to the moon. So I'd keep an eye on that. Yeah, Emedis, Wainwright and Company reiterated at 28. I'm not positive if that's an all-time high. Yeah. So it'd be hard to get to 28 without running into some resistance. And I don't know that I like 28 as a number. I like 24-ish as a number is what I've been saying. I think 24 makes a lot of sense to me. This becomes resistance, get a little correction, and then blast through it. And if it blasts through it, it's not stopping until it gets way up here. I just don't see it. So if we set all-time highs at 28, which would just be barely, that's weird that it would only get to 28. If it gets to 28 without running into a little correction, then it's probably going to keep going. So I would say below or above 28, but not right around 28. But still, that's positive on Emedis that they see what I see. And, that's a 1-year outlook. Analysts only give 1-year outlooks. So he's saying 28 in the next year, which, given that it's going to get back on the Russell 2000 by all appearances, unless they, crap the bed. I think Emedis is still one of the easier stocks to buy. And good grief, sell those $7.50 puts if you're aggressive, and sell the $5 puts if you're more conservative. You're still getting 20%, 5-month return on the $5, and the 750s, you're getting way more than that. You're just more likely to have it put to you. So if you don't mind getting it put to you, I believe the premiums on the January 750s are like 2 something, 225, 250. You're getting a net price down around 5. I think that's kind of a no-brainer. If you're just more into the income and you're not necessarily sure you want it put to you, then sell the 5s. You get $1, $1.25, 20-25% on your money to January. That doesn't suck. So, all right. Any questions? We're going to make this a short one today because I have a lot of reading to do. I think you can hear that my brain needs a break. I think I might take a half an hour nap, get that power nap in, that Ben Franklin deal. Nothing? Are you sure? I've got the charting software up and everything. T-Doc. Oh, there you go. T-Doc. So this one, just look at the 1-year chart. This one has been basing for a long time. People got all weird about the Amazon thing, that they were going to open a little service. I think that just means that Amazon's more likely to buy T-Doc than anything. T-Doc's the monster in this business, not Amazon. Emedis, Clean Energy, a little bit of a correction for you. I think that probably I need to raise the bottom fishing. In fact, we can do that right now. Been going back to 2019 where I can. This one, there you go. Go back to the IPO. What the little dinosaur is. Pull this in. So what we're looking for is a rally to break it out to new all-time highs. And I do feel like I can move the bottom fishing. Boy, what looks right? I might have to ask Shooter about this one. See, that was all building interest. So these people probably sell. These people probably sell if there's downward momentum. But then I think you have bargain hunters come in. And this area right here, jitterbugs around, breaks through, jitterbugs around, jitterbugs around. Yeah, I have a hard time seeing it get much under 12. I guess you could get plausible deniability down here. Stays above it, stays above it. Yeah, probably. That's more technically correct. We have the one correction down there, these little ones down there. Yeah. I mean, we get NFX back at 10 again. I mean, that would be pretty sweet, right? We were buying it down in here. So, but I think that the top of this range, I think you're going to start to see pretty heavy buying right in here. See that? There and there and there. Breaks through it there, breaks below it there, breaks through it again. So these are pretty key price areas here and here. So around 15, I think you get involved if you're aggressive. If you just want to be a bottom fisher, if it gives you a chance to get it closer to 10 with, cash secured put premiums, and there you go there. But the company is going to be adding a lot of revenue next year. And I think that the smart money knows that. This is another one that I think you could probably see it break out to new highs next year. And it's just a matter of figuring out what your cost basis is going to be. So there you go. Somebody asks, what am I expecting from Spire Global? I think that they will continue to add 30 to 40% annual recurring revenues for a while, years, and there'll probably be a spike year at some point. And I think that they're a buyout target. So there's an article, Wall Street Journal maybe this weekend, that talked about how the space stocks were having a hard time gaining traction. To me, it just seems like a stretching of the timeline. Remember the whole discussion of 2 years versus 10 years? I think they got priced based on 2 years initially. Take a look at Planet. It's been pretty much downhill. So when they went public, at $10, that was probably too high. I think the market has proven that. I think they're all pretty much plumbing the bottoms right now. Yeah. What else do we want to add? We can add Sky. We can add Chocolate Lab. I mean, the ologists have gotten annihilated. So I think that we are at a point now where The remaining space stocks have taken their lumps. Their businesses are still growing. The wave of consolidation hasn't happened yet, and takeovers, I think that's probably next. This is not atypical behavior, and we know that space is going to be, I think we know it's going to be $1 trillion industry, but I think we underestimate it. I think that when we get to the point of having a little bit better rocket technology, and they're testing nuclear rockets now. I just think over the next 10, 20 years, it's going to be kind of mind-boggling what we start doing in space. The Mars mission is going to be a big deal. Mining an asteroid is going to happen. This is all going to happen in the next 20 years. The question is when do the investments take off? And we are at the very bottom here, I think, of the hype cycle. And over the next year to 5 years, you're going to see just the adoption of all of this, and then the acceptance, and then the FOMO. I believe that's probably the way it goes, because that's the way it usually goes. Somebody asked, any thoughts on Icon? Yeah, I mean, it's an okay company. I don't have it on my list anymore. There's nothing special about it. Somebody asked about the superconductor material discovery. Yeah, I was reading about that. They still have to confirm that they can keep doing it. So, they got ignition on the fusion thing again, where for a second more energy came out than went in. And probably fusion is really only 30 years away this time. I think the same thing can be said about the superconductors that they're trying to test. They're trying to repeat that. So if all of a sudden they've figured out a way to have ambient temperature superconducting, that's a big deal. But again, that's another thing like space that is a decade or two into the future for when it really starts gushing money. But again, stocks can move before that. So I would think that eventually they figure out the fusion and the superconductors, and then that really accelerates space, right? So I'll put my bet on the space stocks because I think those are closer. And I think the ramp is basically forever. I mean, the space industry ramp is forever. It's got the longest ramp of anything. Somebody asked about the reverse split at Spire. Well, let's listen to the earnings and see what they say. I forget what the SEC limit was to get back above $1. I haven't read the Ginkgo Bioworks stuff. So once again, as I say, I got a lot of reading to do. All right, let's call it a day. I'll get this posted, and then look for the Emedis article, but read the conference call. I think that'll be good background, because I'm not going to regurgitate this, right? I'll link to it, but I ain't going to rewrite it. All right, take care.